what I want you to do is look at how to use this API to gather liquidation data. And we're going to build the exact same bots as we have as these two. We're going to do the two we're going to build are the extended OFI advanced.py and also the Pacifica OFI advanced.py. We'll make new files. The only difference here is you're going to grab liquidation data from that API that I show here. Jimmy, what's up? 777. Good to see you, fam. Okay, and then we're going to have a variable, two variables, liquidation amount and minutes back. For now, it'll be based off of 10 minutes back, and it'll be $1 million. No, 500,000. No, 250,000. 250,000 for the liquidation amount. And if the liquidation amount in that 10 minutes is over that amount, which is 250,000, then there will be no trading activity. All positions will be closed. So you'll make new versions of these two bots and build them like that. You'll just name them the same thing, but call them, add underscore no licks. But then you'll also make two other files, the exact inverse of that. So we will only run this bot when there's over X amount of liquidations in Y minutes. So we'll do the same. It'll have to be over 250,000 liquidations in the last 10 minutes. These will be two new files, and they'll say with licks on the file name. So you should make 4 files based off of our two bots. Don't change anything in those two bots except add in these features. This one feature really of the first two. We're not going to be trading if there's over 250,000 in liquidations in 10 minutes. And the other one, we will only trade if there's over 250,000 USD in liquidations in 10 minutes. Okay, that's going to get the data we need. That should build what we need. Please ask me any questions you have about this. Below are the headers to the data you will be pulling, because the liquidation data does not have headers on it. So you're going to need to know these headers in order to calculate. Okay, so let's go ahead and try to find those headers I was promising her, because I don't have them. Let's go ahead here, cursor. Where are they? Where art thou? Maybe here we can find them. We can find them in bots. Let's see what we have a liquidation here. Lick.stat.arb. Okay. See the headers in here somewhere. Let's just say at hyperliquid. No, that's probably going to be too much. Let's say at lick.stat.arb. Somewhere in here, I call my MoonDev API to get liquidation data, and then I assign headers to them so I can figure out how to calculate how many liquidations were in the last whatever time period. What I need you to do is give me the headers of that data, as that data that's pulled from the API is Pulled headerless, which is crazy, dude. I need to update that. I don't even use cursor anymore. You're watching me my one use for the month. The $20 use right here. There they are, column names. This one right here. Headers for liquidation events. Perfect. Okay, let's go ahead and build them. Ask me any questions you have before getting started with this. So we're on the same page. Thank you. I just want to make sure we're on the same page. 777 Rico, good to see you. Be kind and compassionate to one another. I like that. Jimmy, the 777 is my protector too. Wow. Jimmy B, double Jimmy George, what's up? If you're not willing to risk the usual, you will have to settle for the ordinary. Damn, dude. Be strong in the sevies. Okay, let's go ahead and read through this. Make sure we're on the same page. Great plan, Dr. Data Dog. Let me make sure I understand this correctly. 4 new files to create. Extended OFI advanced no licks. Extended OFI bot that stops trading when liquidations are over 250K in 10 minutes. Pacifica OFI advanced no licks. Stops trading. Okay, perfect. These are right. Use the API from there. Oh yeah. Assume my ENV has the MoonDev API key exactly like it does in the other bot. Okay, let's go get that in there. Remember, this is not financial advice. I'm not a financial advisor. I'm just here vibing out. Please read that. While I go to my ENV. ENV is something you should probably not share with anybody. Never, ever. Never, ever, ever, ever. Keep that safe. Keep that safe, and I'm trying to keep mine safe right now. .env. .env. Oh, I already got the key in there. Cool. Should have checked that first, huh, cousin? Okay. Use the API from logic. Okay. 2 variables, liquidation amount USD, minutes back equals 10. Okay. Sum up the USD field from liquidation data in the last 10 minutes. No lick bots if total is over 250K. Close all positions. Don't enter new trades. If total is under 250K, don't enter new positions. We don't need to close all positions if we're in a position and it goes over 250K or on the other about under 250K. We can just finish that position out. With that in mind, make sure we're still checking the P&L close or the take profit and stop losses in order to make sure that if that case happens, the bot isn't fully turned off. It's still looking to make sure we don't have a position. If we go over the 250K or under 250K for the other one, while it'll say, oh, it's off, we got to make sure that it's still checking the position to make sure it's not in a position, or not necessarily not in a position, but it's still checking the P&L, because it's okay if we are in a position prior to the amount of liquidations. We'll just watch the stop loss and take profit, but we just don't want to have the scenario where we stop looking at the stop loss and take profit because the threshold's hit. You see what I'm saying? Okay. I hope that made sense. Should the liquidation check happen before every trade entry, or continuously in a loop, like every 30 seconds? We'll run this bot every 30 seconds and just grab the last 10,000 results from the liquidation data. You can see in that example how to do that. It should be fairly quick. It should just prevent new entries when those thresholds are over. I already explained it, but we still need to make sure we're watching the stop loss take profit. Oh, use all symbols combined or just BTC? It's a good question. Let's filter for just BTC liquidations. Absolutely make there be a lot of prints that show exactly where we're at in the bot, the amount of liquidations, our thresholds. Overly print, but never ever show private keys or ENVs or anything like that. Let me know and I'll get started building. Okay, so this is BTC liquidation data only. Now that I think about it, let's put all liquidation data in there. Just make sure you're looking at the USD amount. I gave you the columns, so everything should be fine to do the math on the amount of liquidation. Make a note that this is all liquidations, not just BTC, next to the variable. Thank you. Okay, so let's see if you can handle all that because I gave you a lot. Okay, so perfect Dr. Datadog, I understand completely now. Let me summarize to confirm. Check liquidation data every 30. Pull last 10,000. Sum up all USD, not just BTC, for last 10 minutes. Variables, liquidation amount, all symbols, not just BTC. Bot behavior, no licks if total over 250 racks. Prevent new entries only with licks. If total is under 250 racks, prevent new entries only. If already in position, continue monitoring stop loss, take profit, max time, regardless of liquidation threshold. Never stop monitoring. Always check positions even when off for new entries. Display lots of prints. Never show the API keys. Files to create. You got 4 of them, big dog. Let's get it. How's she doing? She's doing good today. She's doing good. I'll give her a 3. JP, what do you think? 777. Compacting conversation. I'm going to take that 3 back. I'm going to take that 3 back. I want it back. Give it back to me, please. Okay, so I just sit here and wait now is the thing. So I'm going to go ahead and research some other things. Let's do that. Because it's compacting conversation and this is building 4 bots out. So, it's going to take a minute. How many minutes? Who knows? But I'll sit here and look at some data. How about that? Okay, so here's some BSC stuff. People are still going crazy over this, so let's go ahead and look at the data. Okay, so those are the new tokies. Liquidity under $1. Liquidity 4K, 28 seconds, 28 seconds, 8 seconds, 13 seconds. CZ. Okay, I don't like these new launches. They're super sketch. Okay, so let's look at these ones. Binance super cycle. Let's look at all the 80s and 70s first. So they each get a score here. Okay, so we got all the 80s open. Back to the 80s. Okay, let's check the 4-hour. Ooh. 4-hour. Ooh. Oh. Okay, let's look at the 4-hour. Let's look at the 4-hour. Oh, wow. Oh, wow, dude. Oh, wow. Let's look at the 4-hour. Okay. So let's look at the 4-hour. Oh, boy. So October 7th was yesterday. Now I'll create the 4 liquidation-based OFI files. Let me create them with liquidation filtering logic integrated. Okay. Bina. Binance yellow. So some of these have gone crazy, but this just feels on Binance, you know? a little. It's a lit. It's a. Okay, sick. I looked through all those. Let's see if there's anything else here. I want to read some documentation as well of some hyper EVM stuff. As now that is not a consensus trade, so I want to dive a little deeper. BNC. Oh, that went crazy for a second. We were watching that yesterday. Oh, this thing's going straight up, but it's probably sketch. Look, yeah, it's sketch. Definitely sketch. Definitely sketch. Okay, so I want to look into some documentation here during this kind of just building time. The AI is building for me. So let's just start with projects documentation. Just want to kind of glance through this. Connect docs here. Notion, huh? It's a Notion. Project X is, oh my goodness, this is crazy. It's a Notion. Project X is built on the belief that tech is becoming increasingly commoditized, and the next era of DeFi will be won by innovation on disruption, incentive, design, and UX. Project X will be rolled out in phases. Phase 1, Hyper EVM DEX. Phase 2, EVM aggregator. Phase 3, redacted. Our team: growth, product, design, technical lead, backend dev, front-end dev. Technical lead, backend dev, front-end dev. PS Project X is 100% self-funded. Farmer dev. Engineer Hyperliquid. Now creating Pacifica version of the no licks bot Dr. Data Doc. Okay, great. Keep going, shorty. Okay. 100% self-funded. Our goal is to create the best place to LP in all of crypto. We believe we created the simplest and most fun way to LP. We also take some of the lowest fees on Hyper EVM, which means LPs earn more. Points. We are focused on creating a point system that perfectly aligns the incentives between protocol traders and content creators. What Hyperliquid did for perp dexes, we are doing to AMM dexes. Points are earned by providing liquidity, trading, and inviting friends. Majority of the points going to liquidity providers. Most of our points are given to users based on how much fees your LP generates. Then a smaller amount of points are also given based on purely how much TVL you have in LPs. Early users are rewarded heavily. 1 million points are distributed every 24 hours. Slashing. We are focused on rewarding users who genuinely provide value to Project X. Any users trying to abuse the system through self-referrals, wash trading, etc. could have their points slashed. Project X logo. Audits. Project X is a direct Uniswap fork with no new or modified logic. The only modification is we enabled a fee switch. We have also underwent 2 audits and an AI security scan for extra caution. Okay. So now creating with leaks version that will only trade liquidations when liquidations are high. I'll need to add pandas import as this was missing. Subgraph, terms of use here. This website hosted user interface enables access to Project X protocol, a decentralized non-custodial system of smart contracts deployed on public blockchains for swapping tokens and liquidity provisioning. This interface is developed and maintained by independent contributors and service providers. The Project X Foundation does not operate or control this interface, nor does it execute or oversee any transactions. The protocol is open source and permissionless, and its smart contracts are publicly accessible. Independent third parties may develop and deploy alternative interfaces that interact with the same protocol. The visual elements, logos, and branding of this interface are protected intellectual property and may not be reused without express permission. The protocol is fully non-custodial. You retain full control of your private keys and assets. At no time does Project X, the interface, the foundation, or its developers take possession of user funds. You understand that no party associated with Project X can recover lost funds or provide access to your wallet. Interesting. So I'm just looking for cool things inside of docs, but that was pretty minimal docs. Not much said here, huh? Let's go ahead and go to the next one. PRJX. Documentation. I just feel like there's alpha when you read docs of different, different protocols. And I would say the alpha I pulled from that was this is a Uniswap fork. Can you please read through these documentations here? And as an algorithmic trader, tell me how I can pull some alpha out of their documentation. I read through the docs. The one thing I came to was being able to fork Uniswap is actually super easy, and you can launch it on other chains like Hyperliquid, and you can accrue fees. These fees they can be a good amount. And what I read in their terms of service was they never take control of people's wallets, so they're never a custodian. Meaning, regulatory matters, regulation would be less, right? As you're never storing anybody's keys. But I know there's been some Uniswap beef with regulators. I don't think it's gone anywhere, but you tell me. And then go read through the entire website and their documentation to see if there's any other alpha or ideas you can pull from it. Okay. I want you to think about this too. I want you to really think about this. Okay, you go ahead and do that. And I'm going to move on to the next one. Let's check out Hyperlend. Hyperlend documentation. Now creating the final file, Pacifica with Licks version, Dr. Data Dog. You're doing a good job. Okay, what is Hyperlend? Hyperlend is a decentralized lending platform designed to optimize efficiency in cryptocurrency lending and borrowing. Built on Hyperliquid EVM blockchain, Hyperlend provides secure, transparent, and highly liquid financial services. Our goal to become the equivalent of modern banking infrastructure with better transparency and stronger foundations. What up, Jimmy 777 fam? Why Hyperliquid EVM? Why Hyperliquid EVM performance? Hyperliquid's L1 chain is optimized for high performance with block latency of under 1 second and support for up to 200,000 orders per second, ensuring fast and efficient operations. Transparency. Every transaction, order, canceled trade, and liquidation occurs transparently on chain, promoting trust and visibility. Custom consensus algorithm. Hyperliquid uses Hyper BFTA, custom consensus algorithm inspired by hot stuff, optimized for speed and reliability. Native components. The chain supports a fully on-chain perpetual futures exchange and other developments such as native token standards, spot trading, and permissionless liquidity. Ecosystem support enables a fully on-chain open financial system and user-built applications interfacing with native components without compromising the end user experience. Okay, it looks like she's done with our 4 bots, so let's go ahead and check them out. So it created 4 different bots here: extended OFI, advanced no licks, extended exchange bot that prevents new entries when liquidations are over 250 racks in 10 minutes, extended. Then it does the opposite as well. Okay, sick. So I'm gonna start. This is how I'm gonna start. I'm gonna write this all down here. I got some notes. Okay, so insert rows above, and we're gonna say here, I'm gonna start with what is it, 10.8 today? Okay, 10.8 OFI advanced plus licks extended off over 250k licks and Pacifica on. Do opposite later. Okay, so that's what I want to do. So I'm gonna take this here, extended, just doing some tracking. Okay, and then we're gonna do Pacifica, and then this is on deck. We're gonna do Pacifica no licks and extended licks. So we got licks, we got no licks on deck. That's on deck. Okay, so let's go ahead and see if they work first. How about that, Jimmy? Extended no licks, extended A B C D E E F G. Oh, it's extended OFI advanced no licks. Okay, OFI advanced no licks. There it is. Copy path. Okay, here we go. Let's go ahead and try to run it, see if there's any errors. Prevents new entries above licks, checking for new liquidations, getting 10,000 last liquidations, no licks mode. Okay, so 0 liquidations in 10 minutes. I don't believe that. Error. We got this PD error here. I'm sure we got it on all 4 files. That's why pandas didn't get up in there. Okay, let me just keep track. Let me get all of my tracking done right now. Yeah, I'm just gonna get all that done, and in between, when I have time, I'll look into more documentation because I think there's alpha there. Okay, let's get that in there. Let's get that in there. Let's get on over to extended. Fix both with licks. Both with licks files have been imported. Have import pandas. Okay, they're good. Beautiful. They're good. They're good. They're good. They're good. It's good to know. Good to know. Let me get this last little tracking in here. Got it. Let's get it. Let's try this again, fam. So it was having a problem getting the liquidation data correctly. Getting liquidation data. Now it's got pandas in here. Didn't have it before, which is nuts. So how could you ever build a bot without pandas? Most recent data, no liquidation data found. Okay, this is probably an error for all four of them, but remember I sent you the columns. You actually have to put those columns on the data because the data comes back out with no columns. So I sent you those columns so you can apply them to the data. Let's see if we can give her a bumpity bump. Okay, so we just had a little error with the column names, and that's cool. Okay, I got all my tracking done, so I'll let her finish up and I'll go back here. Taking you all over the place today, but you got to keep up. If you don't keep up, that's fine. Just step on the gas whichever way you want to go. Add to home screen mobile app. Okay, track your positions on the go. This feature was built so you can see your positions anytime. How to set it up. Key features and benefits. Hyperland is a decentralized finance platform designed to simplify and secure the process of lending and borrowing crypto. Key features: decentralized protocol, operates transparently using secure, audited, and open source smart contracts. Flexible lending and borrowing. Users can generate interest by supplying assets or obtain loans with deposited collateral. Flash loans enables instant and secure loans for efficient execution of financial strategies. Robust security employs audited and battle tested smart contracts, ensuring maximum protection of user assets. Referral rewards, incentive programs, promotes community, offers diverse engagement, user benefits, earn passive income, supply assets to liquidity pools to earn competitive interest, versatile choices, customize your investment strategy by selecting assets and pools aligned with your objectives and risk tolerance, regularly audited, fully transparent, and open source code base. Okay, perfect, Dr. Data Dog. All four files are now fixed with import pandas. Let's get it. 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 Better try again. What's up, 777 fam? Be faithful until death. Be faithful until death. USD not in there. It's not in there. Remember? Remember that? Remember, I gave you the columns because there are no columns. Go ahead and add any prints you need to about the data that you get. Maybe the head so you can see that if you want, but you know you have to apply the columns like I sent it to you. Print anything else you need in order to fix that USD size column not found in liquidations. Okay, let's keep it pushing, bro. Let's keep it pushing. I'm just gonna go back and forth with her. Want to go do the alpha extraction. Okay, love this brief. Quick heads up, the Notion workspace you shared isn't publicly readable on my side. So I pulled the from units public docs, docs.hyperunit, and relevant hyperliquid swap sources. Here's what I squeezed. Just a quick heads up. Just a quick heads up, dude. What? Vision. Since you can't see the article linked above, I'm going to give you the whole Notion below. I don't even want to read what you had to say about that. I guess they don't really need the team. Four. Don't need those. Terms were juicy. The terms were juicy. Send it. Okay, let's get back here. Fixed? Great. Let's get it. Checking lick data. There we go. Mismatch. Which? Okay, let's go ahead. Now we got it fixed. I hope that this leads you to an answer for all 4 bots now. Thank you. I think it should. Let's go back to our chat GPT. I wasn't able to open that Notion. Yeah, I know. I got you. That's why I sent it to you, bro. It's a private or non-indexed page, so I can only work from the text you sent me based on what you provided. Here's the alpha extraction, how you can exploit this from an algorithmic trader's perspective. Core insight. Project X is essentially a permissionless Uniswap 3 fork for Hyper EVM with an eventual plan to become a cross EVM aggregator. That alone is a massive signal. They're replicating Uniswap mechanics, but on a chain with cheaper gas and a growing derivative base, Hyperliquid's EVM layer. Alpha opportunities, liquidity layer arbitrage. Because this is an exact Uniswap's fork, you can run triangular or inter-chain arbitrage between Project X pools on EVM, Uniswap pools on Ethereum, Base, Blast, Hyperliquid spot markets. Fees are lower, 14% protocol fee instead of 16.6, which means you can LP farm and still be first in block arbitrage before routing bots adjust. Alpha Play, deploy a pool watcher bot to monitor fee tier mispricings or delayed price syncs across Uniswap v3 versus Project X, USD ETH. Cheap block times plus smaller TVL equals larger mispricing windows. Let's see what's going on here. Perfect. I fixed it on all 4. So what happened? The issue was the MoonDev API already adds a date time column. What? We're trying to apply it? Okay. Okay. Let's go ahead and see what this does now. Run it. Why am I in a position? How? Who put me in one? Sheesh, bro. Sheesh. I don't have another bot running, so I think it was based off of the whatever. Okay. Let's go ahead and run that back. Got out of that. I think I just let it run a little too long last time after this failed. Okay, let's see what happens. So you can see here in the last 10 minutes, there's been 9 million in liquidations. You sure about that? You sure about that, fam? Are you sure that you have this right? Because it says 9 million liquidations, but I watched the liquidations on my screen and there hasn't been any major liquidations in the last 10 minutes. So I find this hard to believe. Print anything you need to debug this. I'm running it in the extended no licks file if you want to just fix it there for testing. And I think we just have the column names wrong or something, or maybe we're not splitting to be the actual last 10 minutes. Add as much debugging as needed so we can just fix this ASAP, fam. Thanks. Okay, let's keep looking through this extraction here. So, okay, this is interesting. LP fee harvesting and points harvesting, they give 86% of fees to LPs plus points weighted by fees generated. That means the optimal LP position is the most volatile but active, is not the most volatile but active pair. Is the most volatile but active pair. Is in the most volatile but active pair. Okay, not necessarily the high TVL. You can rotate liquidity daily to maximize fees and points. Alpha Play, build an LP optimizer that scans on-chain swaps per pool, estimates daily fee income, repositions LP ranges automatically, targets max fees and points. If they don't have any documentation, do we just use the documentation from Uniswap, or how would we build this out in for real, Python? Or I mean, I can do Solidity or whatever's needed. I'll get the job done. Okay, let's go ahead and read this one next, but let's go ahead and send this in and keep it pushing. Okay, so you can see here, perfect. Made comprehensive debugging. Okay. Said trading disabled, which is nice. Skipping, cooldown, shutting down, continuing monitoring, stop loss, take profit, good. Jameson, what's up, fam? 777. Let us walk in the light. Let us walk in the light. Let us keep pushing in the light. Okay, so this says the liquidations are that much. USD size 917. What time is this? 27. It still seems a little sketch, bro. Still seems a little sketch, dude. Because I would see these liquidations on my screen if there was 9 million of them in the last 10 minutes specifically. Maybe you can save those liquidations to a CSV and we can investigate something bigger too. I don't know, dude. But that seems sketch. Okay. Let's see if she figures that out. So, aggregator phase 2. Classic liquidity mining, airdrop structure, alpha play LP with high fees immediately. Trade in small volume loops to simulate activity without self-referral. Capture early epoch multipliers before slashing. Aggregator phase. So perfect. I've saved all to debug. Beautiful. Shows the oldest to newest. Okay. Let's go ahead and see. Okay, so here we go. Debug recent liquidations. Check out the new file you made. I just ran it. The debug recent liquidations. Maybe you can figure it out now. Okay, let's go ahead and do it as well. Debug recent liquidations. Okay. 10:08. 10 minutes ago. Current time is 10:08, 9:29. That's a 4-hour difference. The daytime is in UTC, but your system time is showing different time zones, so you have to filter the last 10 minutes. It's actually including 4+ hours of time. Yep. I should have known that. The fix is now created. The issue was your system is local time zone appears to be UTC -4. Liquidation day is in UTC. That's the tricky part. I need to remember that every time that I work with this lick data. Yo, good eye, bro. Thank you. Much love to you. Go ahead and update that for all 4 of the bots. Yeah, thanks. Okay, so you can see it's over at 271. So no trading. Okay, but I believe that. So it would take no trades right now. Beautiful. Okay, great, great, great. So we got this set up. This is working now. Let me go ahead and, since we had a couple missed trades in there, I'm gonna say 250K. 250K, 10 minutes. Okay, and I'm gonna also go ahead and update this here. This is gonna be clean, dude. I think this is a good way to filter out volatility or give it volatility. So that's why I'm doing both of them, because I am just testing everything. I'm just a tester. Just a test. I'm just testing. Just testing, dude. Just testing. Just testing away. Just testing away. Testing away every day. Okay, compacting conversation. Perfect timing. Just kidding. But I never do that, so it's my bad. Okay, back here. Let's go back to this here, alpha generator. They said phase 2 equals EVM aggregator. That's the 1-inch matcha play. Whoever controls routing liquidity earns volume rebates. Alpha play. Once aggregator contracts deploy, track their route sources. Check for hyper EVM PRJX to Uniswap routes. Front run the gas optimization routers or custom rate layers on the same chains to collect order flow alpha. Regulatory shield plus forkability. The terms emphasize non-custodial, no token issuance. Panamanian arbitration. That's a clear fork safe design. You could fork their contracts and launch your own DEX on another chain like Solana, C, or Hyperliquid L2 with custom points weighting, 0 fee periods, your own referrals. Alpha Play, create Project Y, a thematic DEX clone optimized for volume churning. Content-driven distribution, they explicitly mention incentivizing content creators via the point system. That's a mirror of Hyperliquid social mining. If they reward Twitter reach or volume via referrals, that's social ARB alpha. Okay, UTC fixed in all of them. Great. So now I'm going to go ahead here and run this Pacifica with licks. Oh, that's actually this. Cool. Look at that. Thinking 10 steps ahead always. Just kidding. Rarely, rarely, rarely. Okay, so it should get liquidations. And let's hope for the best. Let's hope for the best. We have it all live now. Okay, sick, dude. I got that all tracked and live. Tracked and live and ready to go. They're all on UTC now. They explicitly mention incentivizing content creators, blah, blah, blah. Regulatory lens, you're correct, because Project X is non-custodial and has no native token. The SEC risk is far lower. Uniswap Labs faced issues around the front-end entity, not the protocol. The Project X team sidesteps that with Foundation in Panama. Arbitration clause outside U.S. jurisdiction. Disclaimers removing all fiduciary language. That means it's safe to integrate or fork, provided you don't issue a security-like token or run a custodial front end. Okay, so that's sketch. Whatever happened with Uniswap and their SEC stuff and other regulatory things that they ran into. That's sketch, bro. Okay, let's go ahead and see what else is up here because quant integration ideas build a fee yield model across pairs, inputs 24-hour TVL, volatility, output, optimal fee allocation. And you can see here, this took its first trade. So that's dope on Pacifica because it's over the liquidation amount right now. So I want to see, does this work better with big liquidations or without? That's the idea here. So let me go ahead and write that idea out so I have it. The idea here is to run the OFI advanced that did well, but layer in liquidations. So for one of them, I'm going to have, for the extended one, I have only trade under 250,000 in liquidations. And for the Pacifica one, I have only trade over liquidations of the same amount. So we gotta get to see both tests at once. And then on deck, I have the opposite because there may be a little bit inefficiencies or differences in the actual markets themselves. Okay, so I just wanted to write that to myself. Okay, so summary. LP fee alpha 86, okay. Airdrop alpha, okay. How would we build this for real? Or I mean, can we do Solidity or whatever is needed? Great question, Moon. Great question. Short answer, yes. Treat it exactly like Uniswap v3 on a different RPC Hyper EVM. You can use a standard Uniswap v3 contracts ABIs and just point to the Web3 to Hyper EVM plus the Project X contract addresses you pasted. Factory quoted, swap router, non-fungible position manager. From there, you can build a Python or Solidity LP optimizer for that. Okay, what you'll build. Exact fee projections, advanced, validity helper, TLDR, build order, actionable, wire up 1.3 to Hyper EVM plus PRJX, factory pool, NFPM addresses, write pool discovery plus 24-hour swap volume, plus Oracle and Python, implement range chooser, implement fee EV model, implement mint collect rebalance, add a JSON config to set capital target and points weight. Okay, whatever happened with the Uniswap and the SEC stuff? Here's a breakdown of what happened and still happening with Uniswap and regulators, what they ran into, how they responded, and what lessons and risks remain, especially relevant to something like Project X. What's the status? SEC investigation closed, no enforcement. In April 2024, Uniswap Labs publicly disclosed that it had been served with a Wells notice by the US SEC. A Wells notice is not a formal charge, but an indication that the SEC staff intended to recommend enforcement action. The rumored allegations operating as an unregistered securities exchange or engaging in broker clearing activities or issuing or treating uni tokens as securities. Damn. Uniswap publicly responded with legal arguments. The SEC lacks jurisdiction to treat the protocol app as a securities broker's exchange. The uni token in their framing is not a security. It fails the Howey test. The protocol is non-custodial, and Uniswap is more like a software provider rather than a financial intermediary. Then in February 2025, Uniswap Labs announced that the SEC had dropped the investigation / closed it with no enforcement action. Their statement called it a win for DeFi and reaffirmed their compliance stance. As part of that, they noted that they've spent tens of millions in legal defense. Important caveat. This disclosure is one moment in time. It doesn't necessarily immunize Uniswap from future actions or liability under shifting regulatory stances. Other regulatory touches, CFTC action. Even though the SEC dropped its case, Uniswap wasn't entirely free of regulatory pressure. September 24, the CFTC issued an order against Uniswap Labs, the parent entity, finding that Uniswap Labs had offered leveraged or marginal retail commodity transactions in digital assets via leveraged tokens in violation of the Commodity Exchange Act. The order required Uniswap Labs to pay a civil penalty of 175 racks and a cease and desist from the offending activities. The CFTC logic was that leveraged token offerings, especially where delivery is not within 28 days, are within their jurisdiction, especially if offered to retail participants without proper registration. Notably, Uniswap Labs cooperated with the investigation, which likely reduced the penalty. So while the SEC route is currently closed for now, the CFTC route delivered a regulatory outcome for a specific leverage-based product. That's a signal that attack via other statuses is still on the table. Why the SEC may have backed off for now. The Uniswap case offers some insight into how a DeFi protocol can survive regulatory headwinds. Some contributing factors: decentralization and non-custody. Uniswap's design is fully non-custodial. Users always retain control of their assets and keys. That weakens regulatory arguments like Uniswap is acting like a broker or exchange holding funds. Proactive legal posture and engagement. They engage regulators, push public arguments, and frame themselves as software providers. Judicial precedents. Uniswap referenced prior rug pulls, Risley versus Uniswap, class action dismissal, and decisions in Ripple on securities definitions to argue that the SEC's reach is limited in certain crypto contexts. Regulatory shifts slash leadership changes. The SEC leadership has changed, and some of the enforcement first posture of the previous regime is reportedly being reevaluated. Costs and public pressure. Legal battles are expensive and high stakes. The strategic cost and public backlash from going after a widely used DeFi protocol could outweigh expected gains. Risks and lessons, especially for Project X slash Forks dexes. Even though Uniswap dodged a bullet for now, many of the same risks and strategies apply for Project X or similar DEX fork. You should internalize these as guardrails. Regulatory uncertainty always lurks. The SEC's stance can pivot, especially depending on which commissioners are active or following major cases like Coinbase. Even though the SEC closed the investigation, they could revisit or open new claims. Other regulatory, CFTC, DOJ, state regulators may use alternate statuses, commodity law, money transmission, fraud, etc. Products that resemble financial services are targets. The CFTC action was tied to leveraged token offerings, a product with margin slash leverage. If your DEX or LP product introduces derivatives, leverage, or lending, that's a red flag. Token emissions and airdrops are a latent risk. Maintain strong legal narrative and compliance posture. Don't extend beyond core AMMs. Okay, well, that sounds sketch. Let's see what's going on with these liquidations. What time is it? 9:45? Okay. 15 minutes here. ES1. Tesla. Nvidia. Okay, this looks to be working as well. It says trading disabled. There's 3 million liquidations here. You can see here. Still looking at the liquidations. It says there's 3 million in the last 10 minutes, and I believe it. I believe it. I see it now. I see it now. You can see 945, just 0.13. So beautiful, beautiful, beautiful. Beautiful, beautiful, beautiful. Beautiful girl. All right, so what I want to do is I want to keep going. So I got the 2 bots that I wanted to get done. And that is the major win for today. That's what I wanted to get done. That was on my notes. And I love how quickly I can get things done. I can get 4 hours done in an hour now. So test liquidation strategies on top of the OFI. It's essentially what I wanted to do. Take profit hit. Slick, dude, slick. So those are working, both of them. I mean, I haven't seen the other one make an order yet because there's been so many liquidations. But remember this one here, the Pacifica, it said take profit hit because it made a trade because it's the opposite of the extended one for today. Not the fully opposite, but the entry is opposite. The entry threshold. It's not fully opposite though. Not fully opposite. You can rewind and see what I'm talking about, but yeah, dude. So let's see what else is on my list here. I wanted to go through some of these documentations. I want to keep going through this Hyperlend one. Okay, also I want to talk about this. Okay, so yeah, I'm kind of interested in launching something for the Hyper EVM, whether it's like PRJX or something like Aave, Hyperland. Go ahead and look through these documentations with Hyperland and see what type of alpha there is there. Now, for regulations, I am a big old scaredy cat, so I just don't want to do anything that's sketch. And I see the Uniswap looks like it's getting better, but still semi-sketch. So with looking in these opportunities of forking one of these things, whether it's Aave or Uniswap, if it's too sketch for somebody in the US, then I don't want to do it, but I need you to go ahead and like just walk me through the ideas you have and the level of certainty you have behind them and the risk level, etc., etc. Okay, so analyze these docs. I think this is a fork of Aave. I think. Not 100% sure. We'll see. Okay, so let's go ahead and just read through them as well, or at least skim through them. So Hyperland is a decentralized finance platform designed to simplify and secure the process of lending and borrowing. Okay, so we have flexible lending. User can generate interest by supplying assets. Flash loans enables instant secure loans for efficient execution of financial strategies. I didn't know that. That's cool. Robust security employs audited and battle tested smart contracts. User benefits, partners. How to Hyperland. Core components. Core pools are the lending pools that allow the supplying and borrowing of multiple tokens in a single pool. This increases the capital efficiency, but also the risk, since if one of the assets in the pool fails, e.g. market manipulation, infinite mint exploits, the entire pool is at risk. E-mode efficiency. E-mode allows users to borrow with higher LTV when both the collateral and borrowed assets are from the same collateral category, such as stablecoins or staking derivatives. E-mode allows users to borrow with higher LTV when both the collateral and borrowed assets are from the same category, such as stablecoins or staking derivatives. It increases capital efficiency while keeping risk isolated. Okay, let's check out the risks here. As with all DeFi platforms, there are certain risks associated with Hyperland, and users should be aware of them before engaging with our platform. We strive to protect users' assets to the best of our abilities, but no system is completely safe. Smart contract risk. Our smart contracts have undergone rigorous auditing processes conducted by reputable auditors, including blah, 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 blah. See what she said. Awesome. Let's mine the Hyperland docs for trader / build operator alpha and line it for US safe risk lens. Okay. The big picture was uniquely exploitable. Leverage in 1TX Hyperloop. Flash loaned loop position, supply A, borrow B are built automatically with a 0.04% flash loan fee. And each loop sits in an isolated contract. Points still accrue to your main address. This is built for automated loop farming. Borrow against L1 or borrow against L1 spot. You can pledge hyperliquid L1 assets like Hype USDT, UBTC. HL bridges them to Hyper EVM for borrowing. Borrowed stables bridge back to L1 for immediate use. This is perfect for basis trades or unlocking L1 liquidity without selling. Borrow against L1 spot. You can pledge hyperliquid L1 assets like Hype or USDT or UBTC. Hyperliquid bridges them to Hyper EVM for borrowing. Borrowed stables bridge back to L1 for immediate use. This is perfect for basis trades or unlocking L1 liquidity without selling. WHLP is collateralized. Tokenized shares of Hyperliquid's HLP. Decentralized liquidity vault become WHLP on EVM and can be used as collateral in isolated pools. Docs even show a loop farming example compounding HLP yield. Interesting, actually. Liquidations are open and they ship a bot. Anyone can liquidate. They link a reference Rust keeper and document the call flow. Great for a keeper P&L strategy. Transparent rate model plus public API. Classic two-slope utilization IR, Aave style. Infra that's actually indexable. Concrete alpha plays, what to build / run, loop farming scheduler, Hyperloop plus WHLP. When borrow APR dips relative to HLP yield, enter scale loops. When borrow spikes or HLP performance cools, de-risk. Pull data, markets, rates each hour, compare borrow APY on chosen debt assets versus expected HLP. Prefer isolated pools with WHLP collateral to cap contagion risk. Okay, so you can lend Hyperliquid staking profile vaults. Okay, so you can get 7% of this on this and then lend it. 7%, 7%, pretty weak. Pretty weak. Liquidation keeper, cross venue, funded. Rates basis. So run a low latency liquidator funded with the HLL1 or Hyper EVM trigger H on HF under 1, repay debt, seize collateral bonus. Rates basis carry. Supply here, borrow elsewhere. Borrow against L1 spot. Then perp basis, keep your L1 spot like hype. Borrow EVMs on EVM. Borrow stables on EVM. Short perps or deploy to external yield. Unlocks capital without taxable disposal. How? Use the L1 pledge flow. Use bridge in / out automatically. Then route borrowed stables to your strategy. Analytics bot loop meter. A bot that watches borrow APY for HLP APY. If you want to launch something US safe, option A, Aave style fork on Hyper EVM, Hyperlend compatible front end tools. What? A UI plus bot orchestrated looping liquidation carry across Hyperlend and your own isolated markets. Tokens, no token at launch, no yield promises, avoid rev share to users. Regulatory posture, non-custodial UI plus open source contracts is the safer lane. Uniswap's experience. SEC dropped its case, but CFTC did fine labs for leveraged tokens. So avoid leveraged token products. Don't custody, don't offer margin to US retail, don't sell a token as an investment. Medium to high on safety if you stay non-custodial plus no token plus no leverage. Option B, Project X style AMM on Hyper EVM. Straight Uniswap v3 with your own points, alpha, fee switch design, social / points flywheel, aggregator routing later. Regulatory posture, safer than most if no token and no custodial features, but AMMs have been scrutinized Keep front-end disclaimers. Block OFAC jurisdictions and avoid listing obvious security-like tokens. Option C, Hyperlend strategy wrapper. So low, 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 low. Medium. Launch AMM fork, no token. Medium risk. Nah, I'm good. I'm good. I'm good. I gotta keep it low, low. My recommendations: US friendly routes start with bots, liquidations plus rates basis plus continuous loop scheduler. If you want a product, ship strategy vaults. Cool, 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 dude. Well, I feel like I've looked through that here, and that is interesting. We got our two bots twerking here. Actually, we built four, but I think I'm just going to let these two run for today and maybe set up the others later today. Yeah, I'll probably set up the others halfway through. That's what I'm going to do. Halfway through today because it is only 10 a.m. It is only 10 a.m. So I'll watch these today and see how they do. I'll see how they do. A hell of a reversal, dude. A hell of a reversal. I do want to look into. I don't want to keep my eyes off of the Solana trenches as well. So let's go ahead and let's run this board here. So we used Claude in order to build 4 bots today, and that was sick. So you can see these are going to be some of the trenders here. See if there's anything trending. I know BSC has all of the light right now. Trolloween. Some of these Asian symbols here. Oh, I was also, you can see this is 7% APR. Lighter. I don't know if they'll be able to let us see this, but public pools. This is 61%. That's a lot. The Sharp ratio is 6. Zang, dude. Remind me later, please. Thank you. What, dude? That's crazy. All right, so we looked at the Solana stuff. Let's go look at the BNB stuff. Close that. Here's the BNB. Look at the 1 hour. Okay, that's straight up. It's also straight up. This one up and then down. This one up and then down and then up. Okay, so those are the risks. Let's look at the Oracle. We use the industry standard Chainlink decentralized oracles as our primary, most reliable Oracle power. Damn, so everybody just uses Chainlink, huh? Chainlink. Okay. It's down here. Couple 100% this last year. Pith and Redstone are backups. Okay, they use a backup point system or a pillar. The Hyperland Points program begins March 24th. Points are designed to reward users who actively contribute to the success of the protocol. Points are distributed on a weekly basis, with the distribution formula remaining undisclosed. The calculation methodology is updated on a recurring basis to align with protocol priorities and growth strategies. Hyperland reserves the right to modify points, boosts, Hypio NFT holder boost. Users holding Hypio NFTs gain additional point multipliers. Daily claim. Users can claim a daily drop. Okay. Tokenization. H token. H token represents a tokenized supply position, functioning as a yield-bearing ERC20 token. Debt token. Fees. Flash loan fee, reserve factor. Hyperland does not charge any fees on deposits or withdrawals. Users can freely supply withdraw anytime. Liquidations. Each account's health on Hyperland is determined by a single value known as the health factor. This figure summarizes how well your portfolio is collateralized, effectively measuring its overall health. Liquidation occurs when a borrower's health factor falls below 1, indicating that their collateral value no longer sufficiently covers the loan/debt value. This situation can arise if the collateral decreases in value or the borrowed debt increases in value relative to each other. During a liquidation, a portion of the borrower's debt is repaid, and this amount plus a liquidation fee is deducted from the available collateral. Consequently, the liquidated debt portion is repaid. Liquidation penalty. Becoming a liquidator. Liquidations on Hyperland are open to anyone. If you spot an under-collateralized position, you can repay part of the borrower's debt and claim a portion of their collateral at a discount. No whitelisting, no permissions. Whether you're running a custom keeper or just getting started, it's all composable. A reference Rust bot that monitors positions and executes profitable liquidations. The core entry point for liquidations is the liquidation call function. Review the ABI, required parameters, and operational flow here. Liquidation strategies and cross-chain execution. On-chain flash loan plus DEX liquidation. Hyper EVM native, so execute full liquidations atomically in one EVM transaction. Ideal for low latency trades with sufficient on-chain liquidity. Uses the flash loan to repay the borrow, sells collateral via DEX, and captures the bonus. Detect liquidation, initiate flash loan, repay debt on Hyper EVM, get collateral, sell collateral, repay flash loan. Holy smokes. Smooth move if I've ever seen one. Upfront capital plus order book exit cross chain. So liquidator uses own capital to repay debt on Hyper EVM collateral is bridged to Hypercore and sold via the deeper L1 order book. Debt bridging plus order book liquidation. Liquidator bridges debt token from core to EVM, repays loan, acquires collateral. Collateral is bridged back to core and sold on the order book. This is the default strategy assumed for protocol parameter tuning, higher latency and price risk, but aligns with real world liquidator setups. Liquidators interacting with Hyperlend should be aware of the multiple viable strategies for executing liquidations depending on their liquidity profile or desired execution venue. If operating natively on HyperEVM, liquidations can be performed atomically using flash loans, repaying debt, and liquidating collateral via DEXs in one single transaction. Alternatively, if capital is concentrated on Hypercore, liquidators may bridge tokens to HyperEVM using the spot send mechanism, ensuring the token is properly linked, then repay the debt, obtain collateral, and bridge assets back to Hypercore for sale on a deeper L1 order book. When bridging from EVM to Hypercore, ERC20 transfers should be directed to the system address of the linked token contract. Note that fungibility between core and EVM spot assets is not always guaranteed. Liquidators must refer to system caveats to assess slippage and market divergence risks during cross-chain transfers. Referrals, fees, and yield. Hyperlend charges 3 types of fees: reserve factor. Part of the interest paid by borrowers goes into an insurance fund and treasury. Liquidation fees: when a position is liquidated, a portion of the liquidation bonus is paid to the treasury. Flash loan fees. Deposits and withdrawals, 0 fees. Hyperloop. Hyperloop lets you open a leveraged loop position using any 2 tokens. One is supplied, one is borrowed. The token you supply to earn interest or rewards debt asset, the token you borrow in the looped position, which accrues interest. When you deposit, Hyperloop uses a flash loan to instantly build your leverage position in a single transaction. It works like this. A flash loan of the debt asset is taken. The debt token is swapped into the yield asset. The resulting yield asset is supplied as collateral. The same debt asset is borrowed again against the new collateral. The borrowed amount, along with your initial funds, is used to repay the flash loan since the collateral's LTV is less than 100. Okay, so pay 0.404% for that. Borrow against L1 spot positions. This section lets you borrow assets against your hyperliquid L1 assets like Hype, USDTO, UBTC, all from one simple interface. Instead of selling your position, you can deposit your tokens as collateral and borrow directly against them, giving you access to instant liquidity while keeping your core holdings intact. From depositing to borrowing, it's all done in a few clicks. When you deposit your L1 collateral, it is bridged to the EVM layer to be used for borrowing. Once you borrow the stable coins, borrowed assets are bridged back to the EVM. Liquid perpetual positions. Liquid perpetual positions will be a financial service enabled by Hyperlend. It will allow you to open a leverage position on the EVM while being able to use it as collateral in our isolated pools section. At the beginning, you will be able to open a position with USDC, eventually other assets as well, which then transfers it to the Hyperliquid L1 exchange, where it's used as margin to open a futures position. Profits or losses plus funding fees are accrued to the user. To redeem the underlying USDC, shares are burned. A proportional portion of the position is closed, and USDC is transferred back to the vault, where it can be claimed. Plus P&L, plus funding fees, divided by shares. This is scary. If this is scary, dude. Be able to leverage your USDC and okay, if the futures position is losing money, the share price declines, and if the position is profitable, the share price increases. Behind the scene, they are a type of ERC 4626 vaults that allow users to use their hyperliquid perpetual futures positions as collateral on Hyperland. Yield-bearing perpetuals. In short, it means you will be earning yield by using your perpetual positions as collateral, plus funding fees. How? You open a position, get token shares and return representing that position, and use it in our isolated pools as collateral, and then use that collateral in the eco. Concrete example with theoretical numbers. Open a 2x leverage BTC perp for a notional size of 2 million USDC using 1 million USDC of margin for 1 month. Over 1 month, your position generates a profit of 150 racks and 40 racks in funding fees, raising your vault balance to 1.2 million. You put the token shares into our isolated pools and borrow 200,000, 10% LTV, and deposit that into an HLP, earning 20% APR, which yields 3,300 over the same period. Total profit is 193,000, 190,000 USDC trade plus funding gains plus 303,000 from borrowed capital use cases. So while holding a leveraged per position, you use your token as a collateral to earn an additional $3,333 without risking extra capital. Use cases: yield on margin, profitable positions that users don't want to touch to avoid liquidation risk can be borrowed against funds. Borrowed can earn yield elsewhere without adjusting the margin and capturing additional yield. Basis trade leverage. Basis trades often hit a cap due to rebalancing and risk management. By looping capital from one leg, e.g., taking a loan against the long, you can amplify returns without distributing hedge structure. Delta neutral risk transfer. Liquidators or hedgers can atomically buy and short positions to offset directional risk. Perp positions as transferable tokens make them tradable in secondary venues, less reliance on book execution. Strategy vaults. Market makers could tokenize their perp inventory. Retail facing platforms or originators route trades to these tokenized perps instead of public book. Vaults can be created to take part in order flow P&L. Rico! Liquid hyperliquidity. Hyperliquidity. Oh, hyperliquidity. The hyperliquid provider vault is a decentralized liquidity pool within Hyperliquid that allows users to deposit assets and collectively provide liquidity for trading. Participants earn yield from trading fees and share both profits and losses generated from trading activities. Why make it available as collateral? It enables capital efficiency by allowing depositors to borrow against their liquidity positions, maximizing their flexibility without needing to withdraw assets from the vault. How to make it available as collateral: hyperliquid, transfer USDC, blah, blah, blah. Deposit USDC, receive token shares. Okay. Users deposit USDC into the vault, which then transfers it to the Hyperliquid L1 exchange, where it's deposited into the HLP vault. Vault shares, represented by ERC20 tokens, can then be used as collateral in isolated pools. To redeem the underlying USDC, shares are burned. A proportional portion of the vault position is withdrawn, and USDC is transferred back to the liquid HLP vault, where it can be claimed. Example: imagine you deposited 10,000 USDC into Hyperliquid HLP. In return, you receive tokenized shares representing your vault position, WHLP tokens. Currently, HLP offers an attractive yield of about 1.75 per month, which is 23% annually, coupled with low volatility, annualized volatility of 70.89%, and strong risk-adjusted returns, Sharpe ratio of 2.89, lifetime recently as high as 5.2. Because HLP shares are collateralizable, you can borrow and loop your position multiple times. Without loop, deposit HLP, total exposure 10 racks, earning 175 a month, 2,100 a year. First loop, borrow 5,000, 50% LTV, deposit it back into HLP, total exposure 15,000, wow, 262 per month. Okay, 3,000 per year. Second loop, borrow another 2,500, deposit again, total exposure 1,750. Third loop, borrow another one. Fourth loop, borrow fifth loop, borrow. Now you're earning 344 a month. These yield estimates are based on historical performance. Hyperlend architecture. Hyperlend's design centers around a lending pool where users can deposit and borrow cryptocurrency. The platform employs an algorithm to set interest rates based on supply and demand, ensuring competitive rates. It also offers flash loans, allowing users to borrow funds without collateral for short-term needs. Governance is decentralized, meaning users with tokens can vote on important decisions. Security is a top priority, with all smart contracts audited by third parties to protect user funds. I think the alpha I got from this, dude. Oh, I'm not done? I'm just getting started. Hyper track. I'm not done yet. Okay, so what I've gotten so far, let me go ahead and write this down. Flash loans. Flash loans. Hyperlend. Flash loans on HEVM. Okay. Hypertrack. The Hyperland alerts bot is designed to keep you updated. Okay, that's cool. I'm not about to read all that. How do I add an address? What types of alerts can I receive? Health factors, borrow rate, liquidations. How often will I receive alerts? Developer documentation, introduction. Nice. API. So base URL. Addresses must be checksummed. ID. Queries. Get the user's hourly USD net worth. Query current reserve states. Returns borrow and supply APIs for all assets in isolated markets. Okay. Returns all transactions the user was involved in. Query events data. Okay, data and indexers. Ponder indexer. Docs are available at ponder.hyperland. RPCs, you can locate in Singapore. TypeScript, SDK, and docs are available. Contract addresses. Core pools. Flash loans. Flash loans are unique transactions that allow users to borrow assets without upfront collateral, provided that the borrowed amount plus a fee is returned within the same transaction. One block borrows is also another name. Since there is no real-world equivalent, understanding how blockchain state transactions occur within blocks is essential. Flash loans are an advanced feature intended for developers. A solid grasp of the Ethereum virtual machine programming and smart contract development is necessary to utilize the functionality. Interesting. Flash loans enable users to access pools of liquidity for a single transaction on the condition that the borrowed amount plus a fee is returned or a debt position is opened if permitted. By the end of the transaction, the feature is applicable only to reserves where borrowing is enabled. Hyperland offers two methods. The flash loan allows borrowers to access liquidity from multiple reserves within a single flash loan transaction. Enables borrowers to access liquidity from a single reserve in the transaction. Flash loan simple. Execution flow for developers. Here's the conceptual framework. Initiate a flash loan. Okay. Funds transfer and a callback after performing necessary checks. Execute custom logic. With the flash loan, you can do anything. Repayment. So you got to close the flash loan. Transaction complete. If the owed amount is not available due to insufficient balance, lack of approval, or inadequate collateral, the transaction will revert. All these steps occur within a single transaction, meaning they happen within one Ethereum block. Applications of flash loans. Flash loans have various practical applications, including arbitrage opportunities. Execute arbitrage between assets without needing the principal amount up front. Liquidation of positions. Liquidate borrowing positions without repaying the debt up front by using the discounted collateral. Flash loan fee. The flash loan fee is initiated at 0.04% at deployment and can be adjusted via a governance vote. The fee is shared between liquidity providers. Step-by-step guide. Setting up Implement the receiver interface. Your contract that will receive the flash loan funds must be implemented. Grant allowance. Since the owed amounts will be pulled from the contract, you must grant the pool contract. Invoking flash loans or small flash loan from an external owned account, from a different contract, from the same contract. Never store funds permanently on your flash loan receiver contract, as they could be vulnerable to griefing attacks. Completing the flash loan repayment after executing your custom logic in the execute operation. You need to repay the flash loan amounts if you use simple flash loan, or set interest rates to 0. Calculating the amount owed. Ensure your contract holds the required amount plus the premium. This can be calculated with summing the relevant entries of amounts and premiums. Automatic pull of funds. You don't need to manually transfer the owed amount to the pool. The funds will be automatically pulled at the end of the operation. Incurring a debt and deferred payment. This is pretty cool, actually. I think that's my favorite part. Flash loans here on Hyperland. Build some flash loan tests here on Hyperland. That Jarvis. This I just saw this note on my computer. Jarvis Exchange defunct. I want to look into a few things actually. X pollinate airdrop. See if this is even around anymore. Connects. Wormhole airdrop. Okay, so I actually need to update this Luxy thing here because the API key keeps getting leaked. I don't know why though. It's so weird. Let me ask AI. I got a an app that is hosted with Vercel. It uses OpenAI's keys, and anyways, I usually just change my keys in the environment in Vercel, but I keep getting them disabled as OpenAI is saying they're leaked. What could be happening here? Well, obviously they're leaks, but how? Settings, environment variables, OpenAI key, edit, enable. Whoa, 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 whoa. No, I did not mean that, dude. They gave me some pop-up that I enabled on accident. Save, blood. Redeploy, redeploy. Okay, so let's see here. That should be fixed, Luxy. Let's go to GitHub. Let's make sure I'm not sharing this with anybody. How about that? It's probably the first thing I need to do. Watching, public, private repo. Collaborators. Um, 3, 4, 6, 4, 1, 8. Okay, let's see if that helps. Perfect. So I got that set up here. And I feel like we have built a couple cool bots today. And those are now running. Let's see if they have done anything else. So liquidation still over the amount for this one. And this one is working. Okay, great. The flash loans are interesting. And I'll think about this a little bit because that could be a cool project to take on. Could be a very cool project. So I'm going to keep an eye on that. There are some other projects I want to go through here on the Hyperliquid side, but I think going through 2 documentations is probably good for today. Built 4 bots, 2 docs. Peace.